Hi, this is Ron Rowland from Money and Markets TV. The big story this week has been JP Morgan's $2 billion trading loss. It prompted a one-notch cut in its credit rating by Fitch, and Moody's may soon follow suit. If you've invested in one of the three exchange-traded notes issued by JP Morgan, the losses and downgrades may give you cause for concern. As I've explained before, ETNs are different from exchange-traded funds in a very important way. When you buy an ETF, you receive partial ownership of an independently organized entity, a fund. By pooling your money, you and the other owners do something together that would be hard to accomplish individually. On the other hand, when you buy an ETN, you've loaned your cash to the issuing bank. All you own is an unsecured liability. That's banker talk for an IOU. Normally, if someone owes you money and you see them losing money with stupid decisions, you'd think twice before lending to them again. Or if you do, you might demand a higher interest rate. Credit ratings help investors make those judgments. So a credit downgrade tends to lower market prices for an issuer's existing debt. But even though ETNs are technically debt, they do not behave like other bonds. ETNs can create and redeem new shares at any time, just like ETFs, at the present net asset value. The NAV, in turn, is based on whatever underlying index the ETN is supposed to track. Issuer credit risk isn't part of the NAV calculation. So, unless JP Morgan goes into default, which is very unlikely, credit downgrades have little or no impact on the ETNs issued by the bank. Now, I'm not saying that ETNs are risk-free, far from it. They go up and down with their index, and they have default credit risk too. But other factors are far more important to ETN prices than credit ratings. As for the ETN sponsored by JP Morgan Chase, one may sound familiar. The JP Morgan Alerian MLP Index ETN. I've mentioned AMJ before as a way to get income from master limited partnerships, and I think it's still worth a look if you want to participate in that niche. The JP Morgan Double Short U.S. 10-Year Treasury Futures ETN and the JP Morgan Double Short U.S. Long Bond Treasury Futures ETN are both designed to hedge the risk of rising long-term interest rates. They're struggling to track assets and trading volume right now. An ETN can be a great investment in the right scenario. The issuing bank stability is one factor to consider, but it's not the only factor, and not necessarily the most important one. As always, you should look at the big picture before jumping in. I'm Ron Rowland from Money and Markets TV. Thanks for watching.